beneficiary of that will be that liquidity flow that the Fed will no doubt create. They do it every time one of their bubbles start to break. Will go not where they want it to go. Investors are already preferring, and including some large asset managers of name that aren't gold bugs, but they perceive value, less risk, greater reward in commodity-related stocks because they see historically the commodity prices, though they've had a sharp move up, are nowhere near off the page in terms of historic price levels. Bloomberg right now at 110, for example. Well, heck, it was 180 in 2011. Compare that with the stock market versus 2011. Okay, so that's a place to be looking, and we think the prime beneficiary of this ultimately will be gold and silver of the commodity price continuation on the upside. Now, we already have an example. We just dropped 10% in the S&P, pretty sharply too, right? We went from 4,800 to 4,222 in a matter of about 4 weeks. Bloomberg Commodity Index went up. Gold was relatively stable. Silver's dropped maybe a little bit. Most commodities have not dropped. Oil's gained further ground. So what we saw in March of 2020, which is burned in everybody's memory, was a coincident drop in gold miners in the last days of the stock market drop in March of 2000. Actually, stock market started down in February 2020. We put out a major sell. And it was late March, it really caught steam on the downside. Crash dimensions, 35% in a couple weeks. The tail end of that, the gold miners jumped in for about 4, 5, 6 days. That's all. And then once the stock market hit its low, the gold miners zoomed out of the hole and made, went from, I think GDX went from the teens, like $16 up to 46 by the summer. A lot better than the stock market. Now it's pulled back, but the correlation of that event, that emotional event, I don't think you're going to get it because I don't think we're going to crash again. I think this is going to be like a typical bull market top where you get double-digit percent drops, but not of the 35% quality in weeks. Instead, you get 10% over a month, and you get a rally, and then you get another 10%, but there's no emotion in it. There's no panic. And that's the way most bull markets peak in the stock market, without panic. And I think, therefore, people who are afraid of that single event that's burned in their memory of March 2020 need to sort of put that aside. I don't think we're going to see that kind of event again. That's our thought on it. Yeah, no, in other words, you get a bear market in the stock market that starts and maybe lasts a couple of years and has huge percentage dimension on the downside, but it doesn't occur in 3 weeks. We don't have a 35% drop in 3 weeks, which we did in 87, which we did in early 29, and we did in March last year. And you'll notice at 87, it didn't begin a bear market. In fact, when the crash was over, market turned up again. And in March of 2020, you had a crash event. It didn't lead to a bear market. Market turned up again. The only time in over 100 years is the Dow in 29 that did crash at the beginning, rallied back 50%, and then went into an arduous bear market. So crashes are not the way bear markets begin. And so I don't think we're going to have another March 2020 in this time. We're going to have arm wrestling with slabs of decline, but not of the emotional variety we had in March of 2020. So I don't think you're going to see that kind of situation where there's a panic to run out of everything. And like I said, we had a very sharp drop in January for the S&P and the NASDAQ of 10, 12% variety, but no consequence in these other markets that you can overlay and show that, it went with it, So I think that's the first hint of what we're talking about is arduous bear market in stocks, asset flow into undervalued assets, equity flow into those commodities and commodity-related stocks. Back in November, we had a level on gold that we would like to see closed above. And it was we were using quarterly momentum. By that, I mean a 3-quarter moving average, which is almost the same as a 200-day. And it had a structure at a couple percent above on momentum where you could see a flat ceiling. Couldn't see it on the gold price chart. It was descending highs on the gold price chart. But on momentum, it was a flat ceiling, a couple percent above that average. It wasn't at the average itself. When gold popped through there in November, it shot from the low 1800s to the high 1800s. So gold achieved something then that said, I'm awake. That March low of 2021, go by it was 1670. Okay, well, I got up to 1890 in that rally in November last year. The problem was we demanded that silver agree with it, and it didn't. Silver came up. We had a number in the final quarter of last year that if we could close a week out on silver above that certain number, it was in the $25 range. Okay. That we said, okay, silver's joining with gold. It's saying, I'm here too. I'm awake. It stopped a penny and a half short of our number on the highest weekly close and went down.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race. You're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Marco Stan, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I intend, how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Marco Stan.